Good morning, students. Yesterday we have discussed about the accounting treatment under the amalgamation of companies in the books of transfer company, means vendor company. Now, in today's lecture, we are discussing about accounting treatment under amalgamation of companies in the books of transferee company, means purchasing company. So, how we can treat under the purchasing company? Basically, yesterday I have discussed in transfer company, we are either there is a case of merger or there is a case of acquisition. We are following the same entries in the books of transfer company, but in the case of, you can say, transferee company, there are two methods to be followed. If we are talking about acquisition, then we are using a purchase method. If there is a merger, then we are using a pooling of interest method. So here the accounting entries to be done under two methods are when we are using purchase method, for that is amalgamation in nature of purchase. How we can write the books of transferee company? The number one is for purchase consideration due, that is business purchase account debit to liquidator of transfer company. Here, if I'm talking about what I am purchasing as an asset, business I have been purchased, so I will write business purchase account. If we can relate it with the good purchase of goods, when the goods comes in, then we have to pay something. If I'm writing it as purchase account debit to cash account for purchase of goods, same like a same, we have to record the entry for the business purchase. So same here, if I have purchased the goods on credit basis, then I will write, for example, I will write purchase account debit to creditor account. Here I will write the same thing for business, for purchase consideration due, business purchase account debit to liquidator of transfer company, that is with the amount of purchase consideration. Second entry is for recording assets and liabilities. Now assets are combined with my assets, means assets of transfer company are clubbed together with assets of transferee company. So here we can pass individual assets, sundry assets individually account debit to sundry liabilities to business purchase account. If there is a balance which is left on the debit side, that is a balancing figure on the debit side, then we can pass to the goodwill. If that balance is left on the credit side, that should be passed as a balancing figure of capital reserve account. That you can check from the PPT also, I have mentioned in the notes. So when we are talking to the notes of that account, assets and liabilities acquired are recorded at agreed value, otherwise at the book value. If purchase consideration is more than the net assets, the difference will be debited to the goodwill account, as I have already told you. If purchase consideration is less than the net assets, the difference shall be credited to capital reserve account. Next is for payment of purchase consideration. Now, who is a receiver? Receiver is basically a liquidator of transfer company. So that may be we can pay the amount in form of cash, in form of equity shares, in form of preference shares, in form of debentures, of in form of other securities. So here the liquidator is a receiver, so we can debit him. So liquidator of transfer company account debit to equity share capital, to preference share capital, to debentures, to bank, or to other securities. Here they have written a note: if shares and debentures are issued at discount, discount on issue of shares and debenture account shall be debited. If shares and debentures are issued at premium, then security premium or share premium account shall be credited. When statutory reserves such as Development Rebate Reserve, Investment Allowance Reserve are maintained, means these are mandatory or statutory reserves which are to be maintained by the organization for their investments, for their development. So here the entry is Amalgamation Adjustment Account debit. The reserves, we know that they are having a credit balance, so we'll write on the credit side to Development Rebate Reserve to Investment Allowance Reserve. Whichever reserve has been maintained, that should be credited. So here we have to note, when these reserves are not required, there will be the above entry is reversed. So when liquidation expenses of transfer company are borne by transferee company, then following entry should be passed. If we are paying you can say liquidation expenses on behalf of a transfer company, that means transfer company has some goodwill, so we are paying for the goodwill. So here goodwill account debit to bank account. If a transferee company is newly formed and payment of the company as a formation expenses. Formation expenses are also known as establishment expenses, preliminary expenses, pre-incorporation expenses. These are basically made for paid for you can say 10 years, 15 years, means they are having some duration, so we can write off every year. So here we are writing preliminary expenses account debit, as we are passing a journal entry for the expenses, so preliminary expenses account debit to bank account. Next, in case there are both goodwill and capital reserve, goodwill should be written off by debiting the capital reserve. Amount we can take lower of both. For example, if there is a capital reserve in the books of transfer company and goodwill in the books of transferee company, then we have to eliminate the mutual transaction. Mutual transaction, which means we have to eliminate the minimum amount from the both. For example, capital reserve is of 15,000 and goodwill is of 20,000. Then we can write goodwill on the asset side with the amount of rupees 5,000, means 15,000 from both the sides should be eliminated. So how we can eliminate? By passing a journal entry. As we know that capital reserve is having a credit balance, so we can, if we want to eliminate that balance, so we have to debit that balance. So capital reserve account debit to goodwill account. On the payment of liability by the transferee company, here if we are paying any liability, so liability, we know that liability is having a credit balance because that is made from the credit. So liability account debit to liability should be paid either in form of cash, in form of securities, in form of shares, in form of debentures. So liability account debit to share capital to debentures to bank. So till the time we have studied the entries in the books of transferee company under a purchase method, but now we are discussing the books of transferee company where we are following pooling of interest method. Here some transactions are same, some entries are same, but there is somewhat difference between the both the methods. So we are following the following entries. Number one is for business, for purchase consideration due. The same entry should be passed as we are passing in the purchase method. So business purchase account debit to liquidator of transfer company. For recording assets and liabilities, reserves and surpluses. When we are talking about a purchase method, there will be no reserve or surplus should be transferred from transfer company to transferee company or vendor company to purchasing company. But when we are talking about a merger, there is a combination of two companies. So here all the reserves are to be clubbed together. So here we are transferring the reserves and surpluses. So sundry assets we can transfer to the debit side, as we know that both assets are clubbed and assets are having a debit balance. So sundry assets we can pass individually, that should be debited to sundry liabilities, to business purchase, to reserve account or to profit and loss account, if any. There will be no entry for capital reserve, there is no entry for goodwill. So we can record these notes. Assets and liabilities acquired are recorded are at book value. If purchase consideration is more than the share capital of the transfer company, the difference is capital loss, shall be first adjusted against a capital reserve and against the revenue reserve of the then against the revenue reserve of the transfer company. Then if purchase consideration is less than the share capital of the transfer company, the difference is being recorded as a capital profit, and that should be added to the capital reserve account. For payment of purchase consideration, here the same entry should be passed as we are passing the entry into the purchase method. Liquidator of the transfer company account debit to equity share capital, to preference share capital, to debentures, to bank. Note, we can record if the shares and debentures are issued at discount on issue of shares and debentures should be debited. If shares and debentures are issued at premium, then security premium should be credited. Fourth entry, when liquidation expenses of a transfer company borne by the transferee company, then the same entry should be followed. Bank account debit to bank, goodwill account debit to bank account. If formation expenses are paid by the transferee company, then preliminary expenses account debit to bank account. These two entries are similar to the previous one. In case of both goodwill and capital reserve are existing as a mutual transaction, again the same entry, capital reserve account debit to goodwill account. On payment of any liability by the transferee company, then again we have the same entry. In this case, we are not passing any amalgamation adjustment account. We are not preparing any kind of development rebate reserve, any kind of investment allowance reserve. So in the last, we must know what is the difference between a pooling of interest method and purchase method, which is important from your final point of view. Meaning, when we are talking about pooling of interest method is basically, I'm just giving an overview, that is followed in case of merger, where we are just adding the book values. Here all the assets and liabilities are merged or clubbed together. Here all the reserves even we can treat as clubbed. So purchase consideration is basically a difference between purchase consideration and the actual share capital is adjusted with the reserves. But when we are talking about a purchase method, that can be followed in case of acquisition, where we are using fair market values, where we are maintaining some statutory reserves. But here the difference between the purchase consideration and actual share capital is either debited to the goodwill or credited to the capital reserve. So if we can take one by one, there are some points given for a difference. Number one is meaning. Pooling of interest method of accounting is one in which the assets and liabilities and reserves are combined and shown at their historical values as of the date of amalgamation. Purchase method is accounting method wherein the assets and liabilities of a transfer company are shown at their market value in the books of transferee company as of the date of amalgamation. Applicability: pooling of interest should be applicable in case of merger. Purchase method should be applicable in case of acquisition. Assets and liabilities: here we are recording assets and liabilities at book value, but in case of purchase method we are recording at a market value, fair market value. Recording: in pooling of interest method, all the assets and liabilities of the companies undergoing a merger are aggregated. But in case of purchase method, only those assets and liabilities are recorded which are undertaken by transferee company. Reserves: the identity of transfer company reserve is keep intact. But when we are talking about a purchase method, here we have to maintain some statutory reserves because there are no reserves which are kept intact. So in the last point, purchase consideration, difference in the amount of purchase consideration and share capital is adjusted with the reserves. But in case of purchase method, we are following either that should be debited or that should be credited. If the amount should be left on the debit side, then we are passing to the goodwill. If that balance should be left on the credit side, that should be recorded as capital reserve. So if you have any query, then you can text me personally. Otherwise, you can refer these notes or you can comment. Thank you so much for listening.